Okay, so we don't have an NFP today. Everyone's going to be focused on the ISM. I think a very important chart that we have right now is the 10-year yield. So we were rejected at 420, and this is where the rubber meets the road. Can we put in a higher low and then attack 420 again? The count would be if we took out 420 from here, and this could still just be a retracement, would take us up to 440. So I mean, for a trade, if you trade note futures, you could short the notes and then get out if notes start trading back under four. That's how you could handle it if you think we're not going to just break down, because under four, we're going sharply lower. But this is really going to decide the path of rates for at least a few months, what it does here. All right, so let's get to the dollar. It's really just a sideways market that we've had here. We're down 11. So far it's held where it's had to hold. Took partial profits on Aussie from 66.20, and there's some people saying this could be a head and shoulders formation. This could be a left shoulder ahead, a right shoulder here, and that we're going to break to the upside. So you have BE stops at over these highs. Okay, so that's about where we shorted it. The yen, this too will be a big part of the interest rate scenario. If rates are going to break down, so is the yen. And that 46 and a half level that it held is real important. I still think there's a chance we at least get a rally back to 48. And I'm not at this time completely ruling out that we're not going to have 150. Now, we have an election over the weekend, so that's what's going to make the market on Monday. I'm not going to take a position based upon an election outcome in Japan. So I'm just holding a little Aussie and still have my Dixies. All right, let's get to the metals. What a wild week in metals. Again, if you were in our room yesterday, I took a short at this candle right here because I thought that we were going to get a bounce in the gold silver ratio, which we did. Look at this. We had this, and that's why silver was down a buck and a half and gold was down 30 or 40. And I do believe this is a bottoming formation. We still need to take out this low. We don't have to. Maybe we'll put in a higher low, but I still think that the trade favors silver to the short side because I am looking for a recovery in this gold silver ratio, whether it's from here and this was a low or there's one more low that will not confirm. So silver becomes a preferred short. Um, we'll see what happens. I didn't do anything there today because it now looks like gold wants to make another new high. Silver probably does too, but look at the RSI structure between the two. They're both kind of negative, but silver um, at new highs is not going to confirm. Gold at new highs is not going to confirm. So if we stay stiff all day and we finish good, I'll be looking to do the same thing I did this week because there were a couple of great trades. I mean, I was short overnight for this one. I think twice in the last few weeks I've gotten run over overnight where my stop has been taken out. Had a nice gold trade before the break on this day at 83. That was good for about, 40 or so. So I'm just going to sit on my hands, arms folded, but ready to react at new highs. And I'm thinking today that my preferred short's going to end up being silver because I'm looking for a low in this gold silver ratio. So even if you don't trade the gold silver ratio, it's just like even if you don't trade the euro pound, you have to at least track them to give you your preferred shorts because you want to be in the one that performs the best to the upside, and that's usually the relative strength leader. And you want to be short the ones like with the XA gold silver ratio possibly bottoming. It's gotten creamed. So for a rally back to even 85, silver's going to be weaker than gold. Had a few good S&P trades again this week. Even um, had one on from 3680. I've already taken partials for about 8, and it looks like we have a little 1-2. Maybe it's going to go for a new high next week too. But we're up 480 in the S&Ps. It's an up week because we closed, I think, at 58 or something in here. So weekly, for on a weekly, did nothing wrong, did it? Look at that. It's tough to fade, but I'm trying it anyway because last week there was this 110 um, point break 2 weeks ago. So even from early this week, I took one at 90, and that was good for 50. So I didn't pull all 50 out, but I pulled I think 20, 10 for sure before BE stops, and trying it again. We'll see. Maybe something weird happens on a Friday. It's a good week, so probably we'll follow through. But again, I just want to stress the P that means persistence of the 4 Ps, right? You probe it with stops, you take partials, and then you protect the remainder, and then you also stay persistent and persevere if you believe in the trade, because gold and silver hasn't even topped, and I had a pretty good week. Okay, let's cover natural gas because maybe we have a false breakout going on here. Oh no, it's coming back again. Yeah, we're good. So it pulled back to this breakout. Okay. This is more important to me than the trend line. Okay. Because this was really the breakout. So this was a great move. You guys recall last week I was talking about buying this pullback, kind of like what I'm talking about in the 10-year, that it's a pullback and it should go again. But the same in nat gas. Um, and this was a breakout of an ascending triangle, measures 360. But if we start closing back under, say, I don't know, 310, I get out of the way because maybe you have a break to buy, or maybe this is going to flush one more time. So you have a reason now for exiting longs if the market doesn't perform. And from here, you made good money. And let me refresh your memory. We were long for this wave too. So that's a natural gas. S&Ps are rallying again now. Now they're above my sale. Also want to cover the grains are still acting okay. Um, Here's corn. It may still be correcting, but you want to buy breaks. Maybe you'll get a pullback to 410. Wheat's still trying to bottom, but the divergence is um, been going on for a long time. This is a daily. Here's a weekly. So look at this base. So I say stay persistent here too. Keep probing with your risk management stop, and then take partials, and then trail the stop, and keep trying it until it turns good. Beans, we're hearing horror stories about what's happening to our farmers here, especially the bean farmers, because of not having China doing any buying. They're letting, I think, beans rot in the field. But it's a tragedy. Who's going to grow our food next year? There's a lot of bankruptcies looming in the farm belt. So you knock a lot of these guys out of the business until commercials come in and take it over. That could take a while. as it goes through bankruptcy court and stuff. So, so far the beans, they haven't broken out, but they're maintaining the base from this low. To me, it looks like, it could just be here's your flagpole, and this could be some type of bull flag setting up. So, still like those as well. And one more thing, even though the market is rallying, I want to point out, um, take a look at B of A. The banks look very vulnerable to me. B of A, the KRE, which is, our regional banks here, they're trying to bounce, but they've broken trend. JP Morgan's a poster child. So I think that the banks are starting, or people starting to get a little nervous about the banks because we have this repo issue and SOFR issue with banks having to go to these different windows for overnight cash or collateral because there's a dollar shortage. Okay, it's not a yen shortage, it's not a euro shortage. In our system, U.S. financial system, it's a dollar shortage. So that's also part of the bullish argument in the dollar until the Fed comes in and really gets aggressive. And how are they going to ease again if they don't get CPI and get NFP? They're flying blind too. There are some that would say, but Dale, they're always flying blind, but they really are now. So I think that's a wrap. I'm looking forward to next week. We get to do it all over again. I do invite you to join TradeGateHub, okay, where you could go into the room and take a look at all the great content. So here was my scalp, and this is where you find the trades, and this is where you find Mike's content. See, he does a lot of work with people voting with their wallets by in option sweeps. And he's been hot this week. So he's usually hot. So check Mike out. If you're short on ideas, I don't generate as much as he does. And I've seen a lot of the, as Mike would say, calls don't lie. Now I've seen him lie a couple times. When I buy them. No, I'm kidding. I've seen sweeps not work too. Nothing works all the time, except do the right thing today, and tomorrow will take care of itself. Have a great weekend, everybody, and we'll see you Monday. I have an interview. I'm going to bring Peter Goodburn in. Peter's an elite Elliotician. I read him, and he helps me, so I'm bringing him on. Uh, his stuff could help you too. And that's a wrap, everyone. Don't just count your pips, count your blessings.